If listeners haven't caught on at this point, I think we are using Toys R Us as an example here to talk about a lot of companies that are doing things very well in the retail space. One name that we haven't talked about, but I think absolutely deserves mention here, is Five Below.
So I love Five Below. Five Below is growing super rapidly. And you walk in, and I'm not a dollar store guy, and Five Below has managed to straddle that line where it has, say, like, semi-disposable headphones that I know I'm going to break a million pairs. I'm going to lose them. I buy them for my son because he has no ability to not chew on his headphones and destroy them. That's something you learn when you have kids someday. But also you might find like weird Japanese candy or a defunct flavor of soda that they bought out all of, or like a t-shirt that you could wear to paint the house that because it cost $3. It's a really smart business model based on having sort of a core of value of certain items where you can always get like, I don't know, big box of Junior Mints at a cheap price, and the headsets and minor accessories, lightning cables, things like that. And you never know. Like maybe today there'll be yoga mats, maybe there'll be kickballs, maybe there'll be costume jewelry. It's a really fun model, and it's exploding. I think we both marveled online that they claim, and we didn't verify this, that their average store build out takes 8 months to pay itself off. That's not a number other companies ever report, because usually it's like 3 to 5 years. So that's a tremendous sign that this concept is very, very expandable. And they added 53 stores in the last quarter, and they're growing as pretty much as fast as can be.
Yeah, it's been a wildly successful concept, which kind of funny to me is they've been around for quite some time. The stock has only kind of recently caught up to a lot of the major investments they're making in their footprint. You look at this business, they're posting 20% year-over-year growth, pretty incredible for someone in the retail space. A lot of that coming from the new stores they're opening. I think their comps number is closer to like 3 or 4%.
Yeah, so I think this story is a lot like Dollar General, which I've talked about on the show before. Investors are so hung up on same-store sales, they don't look at the fact that when your top selling price is $5, there's somewhat going to be a max for what your store reaches. What's interesting about Five Below is that they very quickly can ramp up to that number. They can eke out a little bit, 2%, 3%, 4% of same-store growth, but they can open another store 5 miles down the road, or 6 or so, whatever the exact number is, and do the same thing. Because it's not a store you're really going to travel for, but it's a store that draws very well wherever it is. I think another very important thing that sort of makes this an attractive stock is Five Below doesn't need to be in super expensive retail. It's a destination on its own. So most of the ones that I've been to, and I've been to maybe 5 or 6 of them, are in sort of secondary strip malls. They're not even always at like, if it's a Target strip mall, maybe they're like really far away from Target, so you have to like move your car to get there. So that holds their cost down. It's also sort of like a big strip mall store, but not a big box store. So their costs are also, very well constrained.
You were talking a little bit about the opportunity when you're selling everything at $5 and below. Management is also experimenting with this 10 below concept. So it's clear they're interested in iterating on this idea. I think that at its core, they're providing a store experience that's really fun for kids too, because at $5 or $10, most kids can go in with, their holiday money, their birthday money, maybe their allowance or something like that, and feel like they can buy most things in the store, which is fun for kids.
Yeah, so we talked about how I used to bribe my son with a trip to Toys R Us. Now I bribe him with a trip to Five Below because I could say, okay, you have a budget of $5, and he could buy like 2 things of candy, a soda, like, a little electronic gizmo. There's a lot of selection and a lot of fun. And one of the things kids really like is having control. When you're under 16, you don't get to make very many of your own decisions. Like what you eat is controlled, somewhat what you wear is dependent upon your parents. So walking into a store where for a pretty limited amount of money, I can give you a lot of choices, that concept resonates really well.
I was looking at the Five Below story, Dan, as we were doing the prep for the show. And admittedly, it wasn't a name I was super familiar with, but I started seeing all these metrics and I was like, wow, 20% year-over-year revenue growth, opening a lot of stores, that payback period on the stores that they're building really strong. I think what makes retail investing so tough, though, is the concept is a winner, but the stock is trading at like 55 times trailing earnings, which is expensive for a retail stock.
It is, but I think you have to look at this. I don't want to say this is an internet proof concept, but I've used some of those websites where you can buy like dollar items and they show up like 3 weeks later. And then when it arrives, you're like, why did I buy a dollar laser pointer that like doesn't work? or why did I buy a stylus for my iPad? There's sort of an instant gratification of the Five Below model. And I don't think that's going to go away. I think we've seen with Costco that people are willing to walk into a store and make sort of dumb impulse purchases. And with Costco, maybe that makes you more careful in the future. If you're spending $3 stupidly, are you really going to change that habit? It's really a price of admission that's well worth it, even if you make dumb purchases every time.